Hey traders, welcome back to another Sunday video. First of all, I just want to say apologies for the lower than usual quality. Today I'm actually doing this from a laptop in the state of Maine. I'm actually here for vacation and well, I'll be back this coming week. It's the end of our 4th of July trip that we're doing. But apologies for this the worst audio today, and just wanted to do this quick video going through some setups and ideas for this week ahead, as we do every Sunday. I'm trying to stay consistent here with the Sunday videos, as I know a lot of people look forward to them, and I certainly enjoy doing them as well. So let's go ahead and talk about everything here. I'm going to be taking a look at some of my own positions. I'm going to be also talking about some commodities, currencies, and indices here as we get into this week ahead, which is a really big week. First of all, something to say about this week is this week on Thursday, you have the CPI, and on Friday, you have the PPI. So it is all about inflation this week. It is the inflation week, to say the least. And I want to go through some of the data that we saw this week, which was really, really important to the rate cut story. We're going to get into that. I'm going to be talking about some of my own current trades. In fact, maybe I'll start today's video with my current open positions. And then we're going to go through some data here and kind of support my reasoning for why I'm in these trades and why I continue to be bullish on certain assets. And let's go ahead and jump in. So again, Thursday you've got CPI, Friday you got PPI. So let's go through some trades. So these are my current positions right now, and I'm not going to lie, they are looking really sweet right now. There are not always moments like this where the account is, doing so well, but we've got a floating P&L here of like 52 grand, which is you know, these are the sorts of trades that are rare for me to get such big winners, but things have been going very, very well, and I've been pretty right in my recent thesis about what I think markets would do. Now, again, I'm not always this right, but let's just go through some of these trades. We'll start with the big one. This is XLK. XLK is a technology ETF. These are companies like Nvidia, Microsoft, Apple, AMD, companies that are on the tech front. And in terms of technology, actually, I don't think Apple is in there. I could be wrong about this ETF, but technology XLK specializes obviously in some of the areas of the market that have been the most impressive this year, which is technology, because of the high growth estimations for earnings these coming years, and they're really in the S&P 500's earnings department, really carrying on their shoulders a lot of the weight. So I am long XOK. I bought this on a pullback in the April pullback that we saw. I added to this position and just has rocketed since. I did have covered calls in this one and chose to take a small loss on those covered calls, which ended up being the right play because this thing has just continued to rocket higher alongside the Nasdaq. So you'll notice that Nasdaq and XOK tend to look very similar. It is because the Nasdaq is comprised heavily of technology companies. So the Nasdaq to me looks just straight up healthy. Not only that, the edge finder is continuing to give us bullish readings on the Nasdaq. You can see here's the Nas right here. Also, the S&P 500 is in there. The DAX is in there. We're going to get to the 10-year treasuries and silver and gold all getting bullish readings here. We've just got a round of strong prints for a lot of the charts that I watch, which has kept me very bullish. I do have a bearish setup on dollar Swiss. That is my only short position right now. But it's not in this brokerage WeBull, which I use just simply because on WeBull you can't trade currencies, unfortunately, but I use a different brokerage for that. By the way, that's just a quick plug, really quick, down below in the description. If you're looking for a new brokerage, there are several that are linked there that have special sign-up perks for my viewers. So check out the links down below. Those are completely, some special sign-ups that I've worked out with each one of those brokerages. So if you're looking for a new one, you'll be supporting my channel if you use those links, and they are great brokers and regulated. So check them out. Anyways, so the Nasdaq, the S&P, to me just look like they have room to keep going. As much as it may feel like, oh, these things are overdone or overbought, and you've probably heard me say that this year, that I do think pullbacks and corrections are due at some point. I still think that, but it does not mean I think that the market is going to be bearish this year. It does look like we're going to get rate cuts. Now, there is a point where I say, I really like gold for a certain reason, which we'll get into in this video. Let's actually talk about gold now. So gold, I'm long GLD. This is just an ETF that tracks the movement of gold. But if we take a look at the CFD, or the spot price of gold here, what we can see is that this market has really broken out. We saw the 2300 level around my actually, I'm sorry, this entry is wrong. I don't know how I got this moved. My buy entry is where this is at. So um, I am long gold with my stop loss now trailed. So I've trailed my stop loss on GLD as I showed you into profit here. And so far, things are going pretty well with this gold trade, but it didn't start out very well. I initially was early to the trade, but it did hold that 2300 level and ripped higher. Why is that? Well, we'll get into the data in just a moment, but what we're starting to see here on a trend, on an economic data trend is, the labor data and economy is starting to show signs of cooling, and that is raising the probabilities for rate cuts. And rate cuts, of course, are very good for things like technology names that require, borrowing in order um, to grow, or an economy that's roaring in order to really do well. Technology companies would benefit in that situation, but gold also would benefit because of its, the dollar becoming weaker if we see a rate cut. So, or multiple rate cuts at this point this year. That is still a possibility depending on what we get out of CPI and PPI this coming week. So, I'm still long gold. My stop loss is now trailed below this, so I can't lose money on this trade. But if the market does continue to see gold move higher, that would be great for my position. Obviously, I'd be able to trail a stop further and perhaps look to really trail stops further if we get up into that, all-time high here, at least on a nominal basis, around 2450. So we'll see. But continuing to watch gold, I'm also long silver. This trade is actually working out really well, even though it was so close to hitting my stop and then just reversed. So it did end up like this, looking like this support around the 29 level really ended up holding well for silver. So I'm long silver. We've actually broken out here on these lower highs that we were seeing on like the 4-hour chart, and now the daily uptrend seems to be kind of back in full swing. So we'll see what happens with that. Again, I mentioned I'm long silver, which is right here. We're up, a little bit on that one as well. And then TLT. TLT is a bond ETF. This is a long duration bond, so 20 plus year treasury bond. Also, again, a play on thinking that there could be rate cuts this year. So I'm long on this one and looking for that to actually go much higher this year if we do start to see rate cuts come into the picture. But again, very dependent on what we get out of CPI and PPI this week for the kind of the timing of those rate cuts. But yields dropped big this past week, and that was again the expectations for rate cuts dramatically increasing is what made yields drop, because now people are saying, well, I better lock in some longer duration bonds or just bonds in general because, well, look, I'm probably not going to be able to get this yield if the Fed funds rate itself starts to come down. So bonds look good. Another position that I've got on, and those are kind of my four prominent positions. Now, I'm also short dollar Swiss, which is a trade that I picked up last week. This one did well on the NFP day, especially. But I picked it up a day or two before that, just kind of because it showed up on the Edge Finder's top setups window. By the way, I'll just take a quick moment to pause and let you know that if you're looking to get access to the Edge Finder, there is information for that down below in the description. So if you'd like to get access to the tool or you'd like to try it for 30 days, that is an option as well. Details can be found at the very top of the description. Should be easy to find. Just open that up and you can find it there. And maybe I'll also pin a comment so that you can see it there, but sometimes I forget to do that. Anyways, Dollar Swiss showed up on the Edge Finder. I like the setup and got short at this level of resistance on the daily chart, stop loss above it. And if we do see this market continue to roll over, I'll look to trail stops and manage the position. So I do like that Dollar Swiss trade so far. It seems to be working out well. Again, let me also reiterate that I started off here well by talking about all the positions that have worked out for me well. I'll show you a trade that did not work out well for me, which was my Bitcoin long position. Unfortunately, this price came all the way back down, broke this level here, trailed me or took me out for a loss on this one, and I'm no longer in the trade. The next one is XLE, which I took a very small loss on this one, but I'll show it to you. So price on Friday sold off on XLE. I liked this upward trend, but then we broke that structure and I ended up taking a very small loss in this one. Now, I actually, whoops, let me go back to that. XLE is the energy sector. So the energy sector, I still really like the idea of potentially getting long in the energy sector. But we broke that level of support. And although my initial stop loss was much bigger, I think I was like down here with my stop loss, I trimmed it smaller after this move in my favor. So what was kind of nice about this is although this was a loss, it was a controlled loss and it was small. On Bitcoin, this was just a loss on my account. I think it was about a $3,000 loss. So just to show you guys, I'm not here to tell you that I always am right about the markets because I absolutely am not. I take losses, but at the end of the day, losses don't really matter. It's about the long-term picture and the overall kind of results. Anyways, let's now just take a quick look at some of this data here, and we'll call it good. So in terms of sentiment data, let's take a look at the COT reports just for a moment, see what's happening. Gold continues to be a very bullish proportional basis from the institutional money, oil, silver, NZD, USD, CHF, JPY, CAD, Russell, and the 10-year Treasury. Those are your most bearish assets on a proportional basis from institutional money from the COT report. On a week-over-week basis, we saw Nasdaq buying. That's good for my XLK idea. Silver buying as well. Gold buying as well. So nice little uptick on that front. Actually, I'm sorry. This is looking like it's delayed by this. I think this is not the newest data. This is the same as last week. And the reason for that, in case you're wondering, is the 4th of July is likely postponing the publication of this data by a day. So just some heads up on that. So I wouldn't read too far into this, to the COT report for that reason. So now I want to also talk about this week's data. We have PMI data that came in much lighter than expected, showing some cooling in the economy. Then you had manufacturing PMI, so the services and manufacturing components of the economy looking weaker than what was anticipated. And so people are starting to say, okay, the economy is starting to crack a little bit here, starting to cool off. Maybe rate cuts are due here. Not to mention, we've also had poor retail sales the last few months. And with the labor data on Friday, let's see if we've got our NFP in. Yep, there's so July 5th. So NFP came in slightly higher than expected, but what you need to notice is the yellow line in our software here shows you revisions. And this is the part that you could have easily missed if you don't fully understand the fundamentals or if you don't have tools that can help you to look at them. Check this out. The last month, the one that was reported in on June 7th for the month of May, they revised that number on Friday down substantially. They revised it from 272,000 jobs down to just 218,000, a substantial difference. So, that was really weak for the labor market. Not only that, we also had job openings. This was, kind of the not really a win or a loss on the jobs front. But here's where things got interesting. Unemployment rate ticked up to 4.1%. So we're seeing a steady climb in unemployment rate in the US. Finally, wage growth continues to slow. This is looking good for the rate cut story. Now, I mentioned earlier, I teased this idea earlier that we're seeing some slowdown in the economy, right? But at the same time, some uh, questions could be, is the Fed waiting too long to rate cut in the first place? And could this turn into more of just more than a slowdown, but actually a potential rising probability of a recession? In that case, I really like gold and I really like TLT. And that is why those two components make up, two of the trades that I've been actively trading. I mean, gold, silver, and TLT could look good if we see a material slow in the economy, like a much more slow, an acceleration of a slowdown in the economy. Um, could make those things look really good as investors get a little scared that perhaps we see growth concerns. And you know what else? One thing to note, a bonus chart here for the day is RTY. This is the Russell. While the market celebrated on Friday, the Russell actually fell. And part of that tells me maybe there are concerns about growth starting to really slow. Maybe the consumer is starting to really feel the effects of all this inflation. And maybe you don't want to buy super sensitive to interest rate stocks. This is my personal opinion. It is why when you take a look at my account right now, you see technology, which has, very profitable companies that make up this, they have current profits, they have free cash flow, they have a lot of cash on hand, as opposed to, perhaps utility companies or industrial companies. Well, utilities would actually be fine, but if I were to look at, sectors for a second, if I'm looking at, let's say financials. Maybe I'm not super thrilled with financials. Maybe I'm not super thrilled with XLY, which is the consumer discretionary. Maybe I'm not looking to buy industrials because these would be more dependent on an economic expansion movement, which maybe growth is slowing and tech can still do well in that environment. But what really requires growth is companies like small regional banks and small businesses, which require borrowing but also strong growth. So for me, the Russell is a trade I still really want to find a entry for. This is one trade I keep talking about, is finding the big move in the Russell because it is severely underperforming on a longer term basis. But in my personal opinion, it's deserving of an underperformance because of they need to be able to borrow money at a low cost interest, but at the same time, you need a stellar growing economy. And it does not seem right now we're going to be able to get a perfect scenario for both. At some point in the future, maybe so. Maybe even later this year, maybe growth reaccelerates. And I'm wrong about that. But that is why I have a good exposure to gold as well as silver and TLT, is because I'm cautious about the economy potentially slowing more so than people are thinking it will. So, anyways, that's my thoughts with that. And I just also wanted to mention that if you, again, reiterate that if you'd like to get access to the Edge Finder, there's information on how to do so down below in the description. And finally, if you'd like to see the trades that I'm taking in real time, if you'd like to get notifications anytime I take new positions, you can find all of that information down below in the description as well. We do offer a service, our Discord membership group, where traders can see the trades that we're taking, but more importantly, they'll see the trades we're taking with full breakdowns and explanations behind each and every trade. So if this video has been helpful to you, make sure to hit the thumbs up button. I'm glad I was able to do this. And sorry you get the ratchet recording here today. I am just operating off a laptop. So thank you guys for watching. Have a great day.